Elon Musk has issued a warning of a prolonged and difficult downturn that could last until the spring of 2024. The Federal Reserve's interest rate hikes, aimed at slowing down economic growth, have caused inflation to skyrocket to alarming levels. Musk, along with tech enthusiast and ARK Invest CEO Cathie Wood, fear that further rate hikes could lead to another Great Depression. With the global economy heavily dependent on low-cost money and stimulus measures, the disappearance of companies that should not have been operating in the first place is inevitable. The time for payment has come, and the storm of bankruptcy is upon us. A Nobel Prize-winning economist has accused the Federal Reserve of being responsible for the current economic crisis in America. He further outlined a critical mistake made by the Fed that created this recessionary period in the country. With a warning of the looming economic recession, Elon Musk has argued that in order to prevent greater damage, the United States Federal Reserve must cease its interest rate hikes. Animating with Twitter employees, Elon Musk warned of an impending recession that could last up to 2 years. He further explained that he believes businesses should be prepared for the downturn and take necessary precautions now in order to protect their investments. The economic crash will be serious, and its effects will not subside quickly. Thus, it's important that companies develop plans to address this upcoming financial challenge. The CEO of Tesla, SpaceX, and Twitter spoke out about the troubling signs seen in recent mass layoffs. He recounted his own personal tribulations during the dot-com crash and financial crisis, remarking that it was an excruciatingly difficult process to maintain his business through these trying times, enough so to make him paranoid regarding possible recessions. For some time now, Musk has been cautioning with regard to the same issues, and even in his inaugural email to Twitter's personnel upon assuming ownership of the company, he wrote, "Frankly, the economic picture ahead is dire, especially for a company like ours that is so dependent on advertising." In a challenging economic climate, he wrote, "With inflation on the rise, the Fed is taking measures to slow down economic growth in order to stave off a potential recession and quell investors' apprehensions that began building up last year." Inflation skyrocketed to a sky-high 9.1% in June and has since remained at an alarmingly high 7.7% in October, far surpassing the Federal Reserve's desired goal of 2%. In order to counteract such danger levels, the U.S. central bank raised rates from close to zero back in March up to 3.75 to 4, with potentials for it peaking beyond 5% for the first time since 2007. Musk, who has echoed his worries regarding inflation to the public via Twitter, is not alone. Tech enthusiast and ARK Invest CEO Cathie Wood cooperated Musk's thoughts with her own tweet that a team considers inflation cooling down, a claim which could potentially result in another Great Depression if further rate hikes occur. Exactly, Musk concurred after Jeremy Siegel, a professor at Wharton Business School, strongly criticized the Federal Reserve for its overzealous stance on inflation. In September, Musk tweeted his agreement that Siegel is obviously correct. On Tesla's third-quarter earnings call in October, Elon Musk vociferously critiqued the Federal Reserve. According to him, Chairman Jerome Powell and his colleagues have been excessively raising rates instead of looking at future data more closely. What's more, he argued that they are too fixated on outdated numbers rather than forward-looking indicators. Also, the Tesla and SpaceX CEO warns that the world could be experiencing its longest recession since the global financial crisis more than a decade ago. When posed the question of how long this economic contraction might last, the world's wealthiest and most successful businessperson boldly declared, probably until spring of 24. If this remains the case, then it would mean that the U.S. gross domestic product will shrink for a longer span of time than during the 18-month recession caused by the Great Financial Crisis from December 2007 to June 2009, an unprecedented event in modern times. Though these downturns are agonizing, Musk suggested that they do have the constructive purpose of filtering out faulty business concepts by eliminating malinvestments from the market. During prosperous times, investments of low quality explode in the system as capital excessively pursues over decreasing returns until the rewards are no longer worth taking on such high risks. When gauging whether to invest in a certain endeavor, investors must take into account the cost of money as established by central banks around the world. The Federal Reserve, the most influential of these institutions, has been intentionally keeping interest rates low for some time so as to prevent regular economic downturns. However, more recently, they have shifted back towards raising their rates again. It is no surprise, then, that since June 2009, the U.S. economy has only once endured a short period of contraction lasting 2 months, as declared by the National Bureau of Economic Research, the government agency responsible for determining when recessions begin and end. In response to the global financial crisis, policymakers have initiated remarkable stimulus measures into the system in order to avoid a recession. This stimulus comes primarily through trillions of dollars of newly created money and fiscal initiatives like corporate tax cuts and pandemic relief checks. With the current low-cost money climate, investors have been compensated for taking their capital and investing it in fledgling enterprises that promise to address significant social issues like Theranos or Nikola Corp, as well as imaginative concepts such as Juicero or Celsius. It's these types of companies that invariably suffer when access to inexpensive funds is no longer available. Recently, Nobel Prize-winning economist Douglas Diamond warned Fortune magazine that the U.S. Federal Reserve's historic decision to keep interest rates low for so long has put the country at risk of an economic crash in 2022. The Federal Reserve rapidly escalated its interest rate by 3 whole percentage points, significantly impacting asset costs ranging from stocks and housing to digital currencies. Even when policymakers were aware of the 8% inflation in early March that same year, they kept broadening their balance sheet and with it, raising the money supply. Elon Musk, one of the most influential figures in business today, recently shared his disapproval with Federal Reserve policies. His opinion aligns with Jeremy Siegel's, who, as a Wharton finance professor, declared that failed policymakers have committed the greatest error since its foundation 110 years ago. Ironically, one of the major beneficiaries of the 2020's pandemic rally was a company that almost didn't make it through, Tesla. CEO Elon Musk admitted at the height of the stock market bubble that his own business was on borrowed time and just about a month away from bankruptcy had it not been for a decade-long period of ultra-low interest rates and monetary stimulus initiated by the Federal Reserve. For several months, the world's richest man has been sounding the alarm, warning that the economy risks a devastating recession if the central bank's monetary policy remains unchanged. The serial entrepreneur has made a fresh forecast as the Federal Reserve has its final monetary meeting of the year in the coming days. Unlike his other forecasts, this one is highly concerning, to battle inflation. The Federal Reserve has recently raised interest rates substantially, increasing the benchmark rate from near zero during the epidemic to a level between 3.75% and 4%. However, many experts believe that this strong monetary policy will result in an economic recession. The central bank will convene for 2 days on December 13th and 14th following 4 consecutive 75 basis point increases. Authorities are projecting a 50 basis point increase in addition. For the first time since September, the Fed will issue quarterly predictions to offer hints as to where they see the U.S. economy heading in the next few years. The CME Group's Fed Watch implies that next week's announcement will be a 50 basis point rate increase, raising the Fed funds benchmark to between 4.25% and 4.5%, with a target rate of 5% to 5.25% by spring. Musk feels that if the Fed announces a rate increase as predicted, it will be a major mistake. He has warned that the decision will send the economy into an even worse recession than currently projected. Elon Musk believes that a recession is on the way and is concerned that the Federal Reserve's efforts to control inflation will exacerbate the situation. In a tweet, Tesla CEO Elon Musk and Twitter founder Jack Dorsey urged the Federal Reserve to lower interest rates quickly or risk amplifying the chance of a catastrophic recession. The statements were made during a conversation with Tasmanian co-founder Vincent Yu, in which numerous others took part. Later in the thread, Northman trader founder Sven Henrik observed that the Fed was too easy for too long, completely misreading inflation. He pointed out that now they've tightened aggressively into the highest debt construct ever without accounting for the lag effects of these rate hikes, risking they'll be late to realize the damage done. Musk replied, saying exactly that if the Fed hikes rates again next week, the recession will be considerably exacerbated. The billionaire declared on his Twitter account. The CEO of the electric vehicle company also agrees with star investor Cathie Wood, who continues to believe that sustained rate rises would lead to deflation, a risk Musk warned about in September. Wood wrote on December 7 that the bond market appears to be indicating that the Fed is making a significant error. At minus 80 basis points, as measured by 10-year versus 2-year Treasury rates, the yield curve is more inverted currently than at any time since the early 1980s when double-digit inflation was entrenched. She said that, in most cases, an inverted yield curve indicates a recession and/or lower than expected inflation. Deflation, in her opinion, is a far greater threat than inflation. Commodity prices and significant retail discounts back up this assertion. 2 days later, Musk responded to her in agreement. Peter Schiff, an economist, disagrees with the two. Schiff said, in response to Musk's remark, that actually the yield curve reflects market confidence that the #Fed will be successful in lowering #inflation down to 2%. Investors have made a mistake. The Fed's sole success will be to exacerbate the #recession, which will destroy the currency and send consumer prices skyrocketing. The spread between 3-month bills and 10-year notes is over 80 basis points, the widest since 2001, and a troubling sign of impending recession, according to a San Francisco Federal Reserve research. A prolonged inverted yield curve has preceded all 9 recessions of the United States since 1955, making it an extraordinarily accurate gauge of financial market mood. Last September, the entrepreneur predicted that a spike in jumbo interest rates would lead to long-term deflation. A significant Fed rate rise risks deflation, according to the SpaceX CEO. Deflationary repercussions can be disastrous for the economy since falling prices encourage people to postpone purchase choices to await additional price decreases. This, in turn, might result in a decrease in general consumption and an increase in inventory of businesses that can no longer sell their products. They cut output and investment as a result. This isn't the first time Musk has warned of an incoming economic disaster. In a similar debate on October 24, the world's richest man predicted a worldwide recession that would run until the spring of 2024, although he admitted that he was just speculating. This prognosis came amid a barrage of economic warnings from other industry leaders, including Amazon CEO Jeff Bezos, JP Morgan CEO Jamie Dimon, and Goldman Sachs CEO David Solomon. The Fed looks to be nearing the end of a rate-hiking campaign geared at combating inflation, which is still around its highest level in more than 40 years. The central bank has raised its benchmark rate 6 times this year, bringing the overnight borrowing rate to a target range of 3.75 to 4%, and is anticipated to increase it a couple more times before pausing. In recent months, the Federal Reserve has raised interest rates significantly, from near zero during the pandemic to a level between 3.75 and 4%. However, many experts believe that this strong monetary policy will push the economy into a recession. The central bank will convene for 2 days on December 13th and 14th, following 4 consecutive 75 basis point increases. Authorities are projecting another 50 basis point increase, bringing the Fed funds benchmark to between 4.25 and 4.5%, with a target rate of 5 to 5.25% by the spring, which is already reflected in futures trade. Elon Musk feels that if the Fed announces this rate rise, it will be a major mistake. He has just warned that the decision will send the economy into an even worse recession than is currently projected. Cooperating with his proclamation to reduce 10% of salaried staff in Tesla as the chief executive of the electric car maker, Elon Musk has cautioned that an impending US recession appears worse than he thought. In an event hosted by Bloomberg, the Tesla CEO declared that the organization would be expanding its hourly staff, yet cautioned it has expanded too quickly in some divisions. As far as salaried individuals, Tesla currently employs close to 100,000 people, but according to Musk's estimates, the cuts will equate to approximately 3.5% of their salaried workers, a small fraction considering they're around 1/3 of the total workforce. On the other hand, Tesla is growing its hourly staff, which makes up 2/3 of their personnel, meaning that despite minor reductions in certain areas, overall numbers remain steady and could even go up in future estimations. Elon Musk shares a similar sentiment to other business leaders, such as Jamie Dimon, who cautioned that an approaching hurricane can be seen on the horizon. President Biden has echoed this feeling, declaring his belief that the United States won't enter into a recession while they are still dealing with surging gas prices and inflation rates at their peak in over 40 years. Additionally, the founder and CEO of Tesla declared that the economic recession could continue for as long as a year to 18 months via video at a Miami technology conference hosted by a renowned podcast. At the conference, he proclaimed that recessions don't always have to be a bad thing. He drew from his personal experience, revealing how when booms persist too long, they can lead to capital misallocation and a cascade of negative effects on those who are unwisely managing their finances. He then further emphasized that when this scenario gets out of control, it leads to a distortion in human capital allocation, which results in people engaging in activities that are not productive nor beneficial for their peers. Furthermore, Elon Musk explained that companies that produce ineffective products tend to go bankrupt, while those manufacturing useful goods are usually more successful. Musk emphasized that if you want to create a successful business, it is important to ensure you have enough capital reserves. By managing your finances carefully and creating an effective product or service, success can be achieved. In Musk's words, it is crucial for companies to have enough economic fortitude to sustain themselves during trying times. Elon Musk attributed the cause of the recession to President Joe Biden and his current team. This administration doesn't seem to get a lot done, Musk said. He then attributed the rising inflation in the US to White House policy decisions. He stated that a key cause of inflation is when the government releases more money than it has, which goes against the philosophy of money. This leads to an exponential increase in currency and thus causes prices to rise due to inflationary pressure on the market. This is not like super complicated, he added. The wealthy mogul has been quite adverse to the Biden administration in recent years. He criticized the White House's apparent disregard for Tesla by snubbing it from an electric vehicle summit while praising General Motors and Ford instead. It's hard to tell what Biden's doing, to be totally frank, Musk said. This isn't the first time that Musk has predicted an upcoming recession. In 2021, he boldly declared that he expected a recession to occur within 2 years. Musk may not be an economist. However, he is hardly the only authoritative figure to have warned of a possible recession in recent times. Goldman Sachs chairman Lloyd Blankfein alerted CBS that there was a very, very high chance of one occurring, whereas Deutsche Bank's economists predicted it would reach America by 2023 due to inflation and escalated interest rates. Moreover, in May, Wells Fargo CEO Charles Schaff asserted that it would be nearly impossible to abstain from a recession, yet he doubted its seriousness. Shortly after this statement, the Federal Reserve raised interest rates by 75 basis points to create a target range of 1.5 and 1.75%. This was the most significant increase in 28 years, as data sourced from the Labor Department revealed that consumer prices were at an all-time high with annual inflation soaring at 8.6% in May alone. Despite the Federal Reserve's rate hike in early May, U.S. Federal Reserve Chair Jerome Powell stood firm that there were no signs to suggest a recession was near. At first, Powell tried to reassure reporters that concerns about a recession were unfounded. However, he later appeared to change his position on the matter, leaving many people uncertain about what might happen to the economy. He suggested that achieving a soft landing might depend on factors beyond our control, including Russia's attack on Ukraine and supply chain problems that could create further complications. According to research by the Conference Board, a business research group, a staggering 76.1% of CEOs believe they are already experiencing or will soon face a recession in their region of operation before the end of 2023. This survey was conducted a few weeks before the Federal Reserve's significant increase in interest rates, which has heightened concerns about a possible economic downturn. Just before the Federal Reserve's rate hike, Morgan Stanley's CEO James Gorman estimated that there was a 50-50 chance of a recession occurring. Although this projection is much higher than his previous assumption of 30, he assured people that such a downturn would not be overly damaging or long-lasting. While Elon Musk has been vocal about this potential situation, other influential US business leaders have also warned of a forthcoming recession. That concludes our broadcast for today. Please subscribe to our channel and activate the notification bell.